Great, and it's amazing how this has really grown and expanded across the world now, I think. The empire is
Singapore,
growing,
New York.
so world domination is coming. Excellent, so I'm going to tell you a little bit about ProFounders Capital, and I'm going to tell you then more, actually, about just some learnings we've had over 3.5 years of venture capital investing. So ProFounders is a London-based, early-stage, European mainly venture capital fund. So we make investments in young companies across Europe, US, so Italy, Spain, Germany, UK, USA. And we set up for 2 reasons, going back 4 years. So the first was that we saw a gap in the market. So we saw the capital-efficient lean startup being built, and we want to create a fund that laser focuses and exclusively invests in capital-efficient internet, mobile, and e-commerce companies. But then on top of that, what we really want to do, and really separates ProFounders, and it says it in the name a little bit, is the idea of founders supporting founders. So a little bit of the Silicon Valley magic of what moves companies forward. So all of the money in ProFounders comes from successful entrepreneurs. People like Brent Hoberman, who founded lastminute.com, Michael Birch from Bebo, Karen Hansen from Top Table, and others. And they're there to help out. So they're not moving to Berlin to make coffee for the team. That's not what it's about. But it's about stepping in the right time and helping out. We've made investments in companies like TweetDeck, that was bought by Twitter, Made.com, One Fine Stay, Leap Motion, Get Your Guide, and others that are kind of really building into world-class companies. So I thought what I would do, enough about me, or enough about ProFounders. I thought what I'd do is I pulled out some common threads, things that we've seen now in 3.5 years, and talk about the impact that it's had on the way ProFounders does business and the way our companies think about business. So number one, biggest change, lots of initial funding out there. If you think about the number of accelerator programs that have been built, right? As someone said, there's 25 in Europe now. Think about the number of micro VCs, Connect Ventures, Hoxton Ventures, ProFounders, Lifeline Ventures, Point 9 Capital. A lot more money than there was 3 or 4 years ago. There's very vertically focused funds, and then on top of that, the big guys, Index and Accel and Vulcan, all look at seed stage investment now, right? So a lot of money coming in very early to these companies. So our learning and what we advise to companies, number one, local is best. At the very early stages, there's a lot of company to be building to be done. So when you look for an investor, local actually does make a very big difference at the early stages. And on top of that, a similarly minded ethos is hugely important for when you build a company. And so you want to make sure that your investors have the exact same expectations for what success means, and they're aligned together on what success means. Because the worst thing that you can do is go into a relationship when you differ about what it means to be successful at the next stage. And that's what's led to conflict and kind of disagreement within companies. So that's number one, was initial funding. Number two, kind of some thoughts on business operations and build. So for our companies, so 21 investments, 2/3 of those, and this is a portfolio with an average age of about 18 months, have international operations. So very quickly, companies move internationally, and you have to be thinking from a very early stage about how you build for multiple currencies, build for multiple languages, how you're going to expand your sales team, what markets you're going to put them in. And so we really want the companies to, at the early stages, figure out what's going to happen. Finally, you're able to prove a lot more very, very quickly in today's day and age. And you're also able to prove a lot less very quickly. And what I mean by that is if things are going well, it happens very quickly. So in our portfolio, 8 companies have raised Series B rounds of financing, average uptake of about 5x, if you think through that. But all of that average time frame to next round investment has been 11.5 months. So from first initial investment to the next round. So if it's going well, it happens quickly. If it's not going well, you know as well early that it's not happening. That means as a young company, you've got to think about the fundraising almost once you complete your first round. Think about the KPIs. Put in structure. Put in processes. You're going to need it much sooner than you think. So finally, and this brings us full circle now, actually back to the next round of financing. And we definitely see companies at the risk of trying to be a lean startup or too lean at times. And at some point, you have to raise enough money to be able to get you through to an appreciable level of value creation for that next round of financing. So listen, there's more investment out there in the early stages. More companies getting funded means more competition for that Series B round. And you need to be properly capitalized in the beginning to be able to move forward. And then the last thing that we've really noticed, and it really impacts the way we think about business, is the internationalization of that next round of financing. So I touched on first round of financing has to be local. A lot of company building to be done. If you move beyond that, what we see is you can be anywhere. Funding can come from anywhere. So all of our companies have raised their money out of the US. We see a great opportunity to bring European companies, to bring the money in from the US. So we've had our companies funded by Venrock, Andreessen Horowitz, Founders Funds, Highland Capital out of Boston, Spark Capital, the initial investors in Tumblr and Twitter. And we really work with our companies to get that pipeline of capital moving back and forth between the Europe and the US. So anyway, time is up. That is a little bit about the learnings that we've had in 4 years, and happy to chat with anyone. Thanks.